Welcome back to Business by the Books. Today I have a special treat for you all. We get so many questions from our clients and business owners of what to look at when they're looking at their financials and how to use them to make business decisions. Now, you guys hear from me week after week on my approach to financial statements, my approach on how to use them to make business decisions in your business. But I wanted to bring on a guest to help you hear from a non-accountant's perspective on how she uses her numbers to make business decisions to grow her 3 businesses. She has 1 business with 2 locations and then a 3rd coaching business. I've watched this woman for about a year and a half now grow her businesses and really use her numbers in the most intentional way possible. So I asked her to come on the show and share her story. I'm so excited for you to listen to this episode. So stay tuned for this episode of Business by the Books, the podcast that teaches you how to use your financials to manage your business. Now, my name is Danielle Hayden. I am the founder and CEO of Kickstart Accounting Inc., where we use bookkeeping as a vehicle to help business owners take control of their numbers. And I've helped thousands of entrepreneurs make informed financial decisions for over a decade. Now, here's my conversation with Christa Gurka. Christa, welcome back to the show.
Thanks so much for having me. I always love coming back and chatting with you.
Yeah, this is great. I'm excited to have somebody on the show who is great about knowing their numbers, but doesn't speak to it as an accountant. You are a business owner and really can break things down for the audience. And I love watching you do that in your group coaching. So let's pause. Just tell the audience a little bit about you and who you are. You're back on the show for a second episode, but in case they haven't heard that one, just tell the audience a little bit about you.
Sure. So my name is Christa Gurka. I'm the founder and CEO of Pilates in the Grove, which is a multi-location brick and mortar Pilates and wellness brand in Miami, Florida. I started the business in 2008 in the middle of a recession. So that I had no idea it was actually going. I had no idea it was going. I tell people all the time I was too young and broke to understand what was going on in the economy. So didn't mean anything. And now 2024, we're a 7-figure annual revenue generating business. And it's definitely, I'm a physical therapist by degree, which we also do private pay concierge physical therapy. And so one of the ways I approach therapy is like a puzzle to me. You know, it's like, why does their shoulder really hurt? Is it actually their shoulder? Is it coming from their hip? And so I kind of look at the body as a whole. And so when I started doing this business thing, I started looking at it the same way. And it fascinates me to be able to look at numbers and have them tell me a story about my business or confirm, or I don't know what's the other word, like it's not confirm what I believe is happening in my business. Because sometimes I'll think something is going on, meaning, oh yeah, our classes are for sure 80% of our revenue. But then when I look at our numbers, I'm like, oh, that is not true. It
Confirming
is a 50-50. Right. It's a 50-50 split between group classes and one-on-one sessions. So looking at your numbers is just and I think, like you say, it's a necessity when you go into business. Like when you decided to incorporate yourself into a business, you took on this role that it's important for you to understand that. You don't have to be an accountant. You don't have to be a CPA. You don't have to be a financial strategist, but you should understand what your numbers are telling you and then learn how to extrapolate, like what story are they telling you?
All right. How often are you personally looking at your numbers?
Okay. So I think that's a great question because I used to look at them like literally 7 hours a day. And I think that was like way too much. That's like too much. That's business owners like just being, and half the time I didn't even know what I was looking at. I was just always looking at them. So
that's
now,
almost like you're scared. And so it's like fear looking.
Yeah, for sure. For sure. And then, so now I look at them, I do have a weekly meeting with my COO, I guess, who's also our CFO, if you want to say that. She's also accountable for the P&L, and we go over our numbers. She tells us everything. I mean, do you want me to tell you kind of what we look at on a weekly basis?
Yeah, let's
Okay.
go. Let's go for it. Yeah, what do we look at?
So on a weekly basis, she puts together a snapshot for me on the business, and we look at overall revenue for the week, how much money came in sales for the week. We look at how many new clients we got in for the week. We look at class utilization. So meaning if we have 100 spots available, how many of those spots were actually filled? We look at financials. So we actually no longer look at profit week to week. It was just it wasn't
I
a
think
long.
it's too much. So
It's too
I'm glad
long.
to hear that.
Yeah.
Yeah.
We used to, but it was like that. What is that even telling us, right? So we no longer look at profit week over week, but we do look at cash on hand, which is good. We started looking at that, and we look at, are we hitting our goal in terms of what we set our revenue goal at, and we do look at expenses week over week. So like this week we had this many expenses, and then we look at profit on a monthly basis.
So when you look at that on a weekly basis, what does it do for you as a business owner, right? Like, does it send you into fear? Does it change the way you're making decisions? Is it just kind of like a meeting that's on the calendar and you see it and you go about your business? Like, what does it do for you?
I mean, right now it's great because Pilates in the Grove is crushing it. So I mean, for me, I'm just like, I got nothing to say. Damn, that's good. Like, so for me, it's good. Also, if there is a week where we fall down, so for example, one of the things we look at is number of class spots that were filled in a week, and then number of one-on-one spots that were filled in a week. So we had a therapist and a Pilates instructor that was out last week. So naturally, I would assume that number is going to go down, but it didn't go down significantly. So when I looked at it, I was like, awesome, right? Looks great. So, and to me, I know, because I've worked backwards from this, what our utilization needs to be to hit our goals. So as long as I see that utilization is at or above there, I feel great. I feel good. I'm luckily at a place also where I trust wholeheartedly the person that is giving me the numbers.
Oh, that's important.
Yes.
Yeah.
Yeah.
If you're looking at numbers that are inaccurate,
I mean, you don't
you're
have confidence.
really spending more time. Yeah.
Yeah.
And if you don't have somebody who's giving you the numbers, you're spending your time putting together numbers that you want to look at rather than spending your time actually looking at the numbers. So you're really coming in at this as a CEO, like I can just analyze the numbers.
Correct.
And move on rather than having to spend the time putting it together.
Yep.
You had mentioned goals. So I just want to go down the rabbit hole a little bit of that. So you mentioned that you knew the utilization rate that you needed in order to hit those goals. When did you do that goal setting exercise and how did you determine that?
So we started, here's the thing that I'm not, well, I wouldn't say I'm not great at it. As a high achiever, it is very hard for me to take my foot off the gas pedal. It's very hard for me. So
me too.
Yes. And so even when you and I did the podcast where you were on my podcast and we were talking about investing and you asking me questions about like, well, why do you want to grow and get bigger? Like those really are, hard for me because I was like, because we can. And there's money we're leaving on the table, right?
Why not?
Why not? Like who would not do that? So I really made a concerted effort this year, well, in 2023, that the plan for 2024 was going to be to optimize profitability. So I really did not want to spend a lot in, capital expenses and things like that. I was like, we're going to let this ride. We're going to.
What made you want to optimize profitability? Like, was there something going on? for you?
Yeah. And I think that that's a great question. So obviously in the fitness and wellness industry, and a lot of industries, but specifically fitness and wellness, coming out of 2020 was really hard for a lot of us. And so for the last, through 2023, we were basically like rebuilding a business. I, as a founder, felt like I was starting from scratch. I really did. We had team turnover. We had loans we had to take out. We had to basically redo a lot of things in our businesses. So it was we were spending and we were grinding and we were hustling, and finally our revenue was going up, but we had like so much debt that in 2023 I finished, I think, 2022 I finished net zero profitability, like break even. I had finally paid all my loans back. We were going to start 2023 hopefully net positive, right? And so we did well in 2023, but not to where, when you talk about healthy profit margins, 15% profit, we were not back to that yet, even though our revenue was growing. And so my team and I really said, I want to get back to this profitability before we decide what to do. And then also I met with mentors and I was like, where do I sit? Am I growing? Am I saying? And to a couple people, they really said, make your four walls as profitable as possible before you decide to do something else. So that was how I came up with that goal.
I love that. Thank you for sharing that so openly. I think that's really important for people. We don't have to scale just because everybody else is scaling. We don't have to be profitable just because Danielle says you should be profitable, because you are paying taxes on those dollars. You need to understand why you want to be profitable. So, and rather than starting another new thing, right? Rather than opening up a third, fourth location, let me be profitable in these two locations before I continue to expand my arms.
Right. And profitability, to me, it's kind of like what I tell my kids about education. I'm like, education gives you options and gives you choices. So when you get trained in something, when you go to college or technical school or vocational training, nobody can take that away from you, right? So it gives you options as to what you want to do. And when I look at profitability, I'm like, profitability gives you options. It gives me the option to take it as a draw or in my salary and pay taxes on it. It gives me the option to reinvest in my business. It gives me the opportunity to grow should I desire to do that. It gives me the opportunity to give my team bonuses, hire another person, do a build out, expand location. So like, it just gives me opportunity and to decide what I want to do with my business, rather than have that be dictated by circumstances where we have no profit and thus our options are limited in that respect.
And reactionary.
Yeah,
reactionary.
Exactly. Yeah.
Okay, so you had decided that 2024 was your
Profit.
year to focus on profitability. At what point did you say, all right, what does that mean, right? Like, How do I look at this? What decisions do I need to make? When did you do that? And what decisions did you make around that?
Yeah, as we were coming into the end of 2023, probably like after summer. So for us in health and wellness, after summer, people getting back to school, that's also a big revamp of people coming back into the studios and things of that nature. So I really started looking at, again, what would it be like if I took my foot off the gas pedal a little bit? Like, we don't always have to be grinding, hustling, grow. So I was like, okay, this is the team I currently have. This is the capacity we currently have. So one, it's time, right? People aren't coming in at 3 a.m. Two, it's, do we have the team? They might do their books at 3 a.m., but they're definitely not coming to Pilates at 3 a.m. And then, do I have the team to fill those spots, right? So I looked at that and I said, if we hit I think it was like 72% utilization overall. I then did the numbers to a dollar amount. Can we hit our goal of doing $1.5 million in 2024 with a profit margin of 15%? And the answer was yes. So this is also the way that I articulate it to my team, because $1.5 million is a big number. And when you don't put it in context, it becomes very hard for people, at least it's been my experience, to be like, well, how do we get $1.5 million? Like, it just is not tangible to them. So when I say 72% utilization, there is a very specific number attached to that. It's, I mean, I don't know it like off the top of my head, but let me tell you, it's like 300 visits a week in group classes. It's 80 visits a week in one-on-one sessions. It would be, you know, so I have a number that I can give to my team and be like, we need to hit 300 class visits this week. And that is easier for them to control and like manage. How can they impact that number? You know, and so that's what I look at.
And then did you map your spending to that as well, right? Because
Yeah.
customers aren't going to just come fall out of the sky and land in your studio.
Well,
Did
luckily,
you then map what you needed?
I will tell you that Pilates is hot, 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 hot right now. And so I think it's also worked
So
out
they
in
kind of are.
they kind of are. And so I think it's just worked out in our favor that it ended like that. But yes. And luckily, I have someone on my team, Lauren, who is really amazing with finances as well. And so she has also significantly decreased our spending. And when I say significantly, I don't want you to be like, oh, we cut everything. No, but there were definitely, she went through our whole P&L, all of our expenses, found subscriptions that were redundant, found things that we no longer needed. You know, coming out of COVID, you know, everyone had 1,000 Zoom accounts. She was like, do we need all these Zoom accounts anymore? So she really went through the spending side and got us to streamline that. So that was really great. So we did what affects your bottom line. You know, we did from the top and the bottom. So we were able to add revenue and decrease expenses, which is like a win-win. So, and you know, and it's also been, we were able to, I think we got to the point that we were able to add one more reformer in. And so we could do that. We did have the ability to bring on a new team member. Because that is the one thing sometimes, at least for service-based businesses, right? You may have a goal to say, do $250,000 in revenue. But if that's an arbitrary number and you don't look back to say, well, do I even have the pricing structure or the team to hit that number? You're going to think you're failing. But the truth is, you just don't have the infrastructure to do that, right? So if I was alone and I wanted to hit $250,000, like, it would be very different than me having a team to do that. And so I think that's important for people to look at.
What gave you the permission, or how did you give yourself the permission to go ahead and purchase that reformer, to go ahead and hire that team member, right? Like, those decisions, those spending, they can be really hard for business owners.
Yeah.
What did you do to give yourself permission? Like, this is okay. Let me do this.
Yeah. So the extra machine was, we had the space to put it in there. We had almost all of our classes were on wait list, and my team gets paid per person in class. So it was a way for me to allow them to generate extra income and allow people, I was getting, nice complaints that people were like, I can never get into the class. It's always waitlisted. And so I was like, you know, we do have the space. Let's go ahead and buy the extra piece of equipment. The other thing we did was I was going to buy an extra piece of equipment to do multiple services at one time. And then I actually sat back and looked and I said, you know what? We actually could just switch. 2 locations. So I was like, we could actually just swap this piece of equipment out and it would serve the same purpose. So like we didn't need it at one location and I just brought it to the other. I just swapped it out instead of buying it. So that was how I came. Now, in terms of hiring, the other thing that is beneficial to me is I don't necessarily have to bring someone on full-time salary, right? So if I need, and the reason I looked into hiring was because we were almost at capacity with the staff that we had. They were all operating at like 80, 85% utilization. So 80, 85% of their schedules were full, which means if somebody gets sick, if somebody goes on vacation, we have to cancel all those services because we don't have any. It's not that other people won't step in to help. They're working. They're already seeing clients. And so I get worried that sometimes my team is going to burn themselves out because they're going all the time. And so I said, we need a few extra instructors, probably even at an independent contractor level, like that would be available as a sub. So I don't have to give them 25 classes. I can say, you know what, we have a space to teach 1 class a week, 2 classes a week. They work at other locations. But it also gives us the ability that if we need a sub, they're like, oh, actually, I'm free that on Tuesday. I could come in and teach. And so it's really, they get paid when they generate revenue. So that to me it's with the exception of opportunity cost, meaning does it cost me to hire them? Yes, in terms of time spent recruiting, et cetera, auditioning, onboarding. Yeah, so we do not take that lightly. Like that is a big part of our hiring process.
But they're not sitting there with nothing to do if
Correct.
nobody shows up. Right.
And getting paid for it. Yeah. So that's unique. That is unique about our industry, I think.
That is.
Yeah.
Yeah, that is. All right. So I kind of put us in a rabbit hole at our weekly dashboard review 10 minutes ago. That was really helpful though. So it sounds like to me, you do the annual goal setting process, a financial budget, then you're reviewing on a weekly basis compared to the budget, revenue, cash on hand, and then specific utilization week to week. Anything else I'm missing on a weekly basis?
On a weekly basis, no. On a weekly basis, no. Yeah.
And then what are you looking at on a monthly basis? When it comes time to say, Christa, know your numbers at the end of the month, what do you look at?
Yeah. So it's really on a monthly basis that we do look at budget to actual. So like that's really when we're looking at, did we hit what we forecasted in revenue this month? Did we hit what we forecasted in expenses this month? And therefore, is our profit where we want it to be? So that we are looking at on a monthly basis. We also go through and make sure that everything in our books is, what's the word I'm looking for? Not reconciled, but when this is again, menopause brain, categorized properly, right? So for example, if I think you talked about this in the group the other day, there have been times where I've accidentally used my business card to purchase something. And so,
for personal expense or vice versa.
Yeah. And sometimes what I'll do is, my husband does the books at our house. So if I wanted to buy his birthday gift, I'll put it on my business card and then I don't want him to see what it is, but then so they'll like, what's this charge for XYZ? And I'm like, oh, take it as a distribution, please. Right. So we do that monthly to make sure that everything is categorized properly. We also make sure things are categorized per location. So we don't have separate QuickBooks accounts, but we classify them in our ledger so that we can really see individually how is each location performing.
We'll get back to the show in 1 second, but real quick, are you a business owner feeling overwhelmed by your finances? Do you find yourself wishing you had more control and understanding over your money? Managing your business finances can often feel like navigating a ship through a storm without a compass. But what if instead you could master your business finances in just 5 days? With the confidence to manage your money, make informed decisions for financial stability, and implement strategies to increase your profitability effortlessly. And that's exactly why the 5-day video bootcamp was created. It's a comprehensive course designed to empower you with the foundations for financial success. Throughout the bootcamp, you'll learn the foundations, how to manage costs for profitability, evaluate investments for growth, and avoid common financial pitfalls. So if you're ready to take charge of your financial journey and rewrite your success story, head over to esuite.co/5-day bootcamp or click the link in the show notes and sign up for the bootcamp today. Okay, back to the show. From a non-accountant's perspective, what are the reports that you're looking at specifically? Like, do you look at your balance sheet? Because I think I talk about the balance sheet all the time, and I feel like people are rolling their eyes at me. So as a business owner, are you looking at your balance sheet?
I am, not as frequently as I'm looking at my P&L. So I will say that. So I will say that I do the balance sheet, even though I do understand it, took me a lot longer to understand the balance sheet than the P&L.
Of course.
It did. So I also look at my bank account just to make sure things are, are they hitting, the deposits coming? Because, money's coming in from a lot of places. Like money's coming in from our scheduling platform. Money is coming in from certain vendors that we invoice through QuickBooks. Money's going out through the credit card, through payroll, so I just, I do look at the bank balance. And then also monthly, we do how much net income do I have at each month? And I take a percentage of that out of my operating expense and put it into my tax savings. So I'm making sure that, like right now, for example, our reserve accounts have more money in them than our operation account.
I think that's pretty normal if we're properly planning. So tell me, let's talk about the reserve accounts. Do you just have one reserve account for taxes, or do you have multiple reserve accounts?
So I have 2 reserve accounts. And so the reserve account number 1 is basically 1 month's worth of operating expenses. So it's 1 month's worth of operating expenses. And then everything else is in reserve account number 2, which is saving for taxes. And then, depending on what happens at the end of the year, it could be for bonuses for my team. It could be reinvested into the business. I don't know what I'm going to do with that money necessarily until the end of the year or the beginning of the following year.
I appreciate you sharing that it's 1 month worth of expenses, because I talk a lot on the show that it can be 1 to 3 months worth, but as you and I have talked, like as you grow, when you're doing $1.5 million in sales and a big portion of your revenue is payroll, it is very difficult to have 3 months worth of expenses saved. Yeah. And I don't really think that would be the best use of cash either.
Yeah. So I've said this too. I've never had 3 to 6 months worth of operating saved ever in my business in 16 years. At the beginning, I was naive to think that I needed savings. And then I was not profitable enough to have that much savings. And then when I did, I will say though, there was a year that I don't know what came over my brain, but I was like, we are crushing it. This is awesome. Look how good we're doing. Da, 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 da. And the whole time I'm like, oh, I've been paying my quarterly taxes. I'm good. I took my whole team on a retreat, like a weekend away with their spouses. I paid for everything. And then came tax time. And my accountant was like, yeah, you haven't been paying quarterly taxes. And I was like,
what happened?
What do you mean? Yeah. So that was just me realizing like I cannot 100% abdicate this role. At that time, it was just me reconciling my books. I didn't really have a bookkeeper. I didn't nobody else would buy me was like, hey, you should maybe put some of that money away. So now this is what happens, right? You live and you learn. You're right. I mean, our payroll is like, our payroll every 2 weeks is like $35,000. So it's like $70,000 a month. So it's high.
And how do you have that just yeah, 3 months before that sitting
Yeah.
around and
No.
again, not the best use of cash. Even at these high yield savings
Yeah.
accounts, still not good use of cash. All right, is there anything else when you look at your balance sheet that you're looking at, that you think it would be important to mention to anybody?
I mean, there are definitely things sometimes that I look at and then I go back to my accountant and I'm like, I don't understand. This number doesn't make sense to me. And usually it's something that has to do with they did some journal entries for tax time and it didn't get taken down or something like that. And then also with the PPP money that's been like over the last couple of years, it's nobody really knows what's happening. And then the ERC money, which is like the employee retention credit back and forth. And I think that just jacked up a lot of people's books. I look at my, I do look at my, hold on, what am I talking about? Like the depreciation. I usually ask my accountant questions about the depreciation, like what's the formula for this? What does this actually mean? Things like that. But besides that, I really, no.
Let's hang on that for a
Okay.
second. Let's hang on that depreciation and not the fact that I want anybody to ask about depreciation, but I appreciate the fact that you said I need to ask my accountant, like, what's the calculation for that? Why am I taking it? Over how many years am I going to take it? Rather than just saying, I'm just going to do whatever they tell me to do and ride the roller coaster. I think that's an ownership over your business, your financials, your taxes, because ultimately you're responsible, and taking the pause to actually look at the information and ask questions.
Yeah. Because I get confused sometimes. I'm like, I don't understand where you got that number, right? I just would like them to explain it to me, so I just have knowledge.
Yeah.
The other thing I will say, our balance sheet is at least now, it should be much better looking now because we really don't carry I've never really carried a ton of debt. We pay our credit cards off every month. It really wasn't until COVID that I had to draw from my line of credit. I had to get, a couple loans. So really the balance sheet didn't change too much over time. And so that's why I was looking at the P&L a lot, because we didn't, as a business, carry a ton of debt. So I didn't have a bunch of stuff over there and I wasn't taking draws that much anymore. So I was on the P&L. So most of the stuff was coming through the P&L. So that's just the caveat I'll say.
Thank you. I think that's important to know. And I know this about you, that you have always felt that you would rather take that salary. And as an S Corp, you take that salary through payroll. You are on the P&L of your business and you are not taking a ton of draws or commingling business and personal. So you don't have as much to look at in that balance sheet if you're not carrying a ton of debt and you're not taking a lot of those draws. Most people will say to me, Danielle, you keep on telling me I'm profitable, but I have no idea where the hell my cash is. Well, your cash is hiding on the balance sheet. It's hiding in your debt payments and your owner's draws.
Yeah.
So my next question is going to be, are you looking at the cash flow statement and is it telling you anything really important? Or is it, because you don't have the debt and the owner's draws, the cash flow statement isn't as important for you at this point?
I used to never look at the cash flow statement because once again, I had no idea what it was telling me. But now we started tracking it. Cash on hand, how much can we expect to bring into the business each and every month? How much do we expect to go out? And we do make decisions based on that. Like, I'm not going to have a huge capital expenditure in the time of the year when we have lower cash on hand. Or we sometimes will say, so for example, July is our least busy month. Always. And so what we did last year was we were like, let's just get some cash influx. So we ran a special that was only for July and August. So we got cash and it was something they had to purchase. Like it was a package we didn't normally sell. So we did get the cash on hand and it had like a 60-day expiration. So it wasn't like I'd people would buy it and then be able to use it for the next 10 months. So
Yeah.
we'll do smart things, like that from time to time. I do look at my bank frequently, especially just to see the cash on hand. So for example, I met with Lauren this morning and she's like, we have a payroll and we had a credit card statement hit, like we had a credit card bill hit. So those weeks tend to be, a lot. So we talked about this too in my group. So when I just did my quarterly review, January and February had the same amount of revenue, which was awesome to me because I was like, that February was a short month. We still hit the same revenue mark. And January had like
It can be but and.
Okay. And I'm trying to change my brain to say and. January had like a 24% profit and February had a negative 2% profit. And so if you're only looking at your numbers and you're only looking at them in like one frame of time, somebody would be like, oh crap, like bad. But I knew that we ended up having 3 payroll hit in February. It's just the way that they worked out. On February 29th, which is the last day of the month, we had a payroll hit. And I just said payroll for us is $30,000 to $35,000. So that's a $30,000 swing that put us under, right? But then March turned around and finished out great. So you also have to be able to look at it in terms of, I'm looking at the big picture, not just little bit at a time, which I have the benefit of doing because I've been in business for a long time.
Well, I think we could all look at the month and year to date. So when we send our clients their snapshot, that's why we always include what does this month look like, but then what is the year to date. Now we had a similar thing happen. Ours was in January, so we do weekly payroll. So our flux was in January, but when we look at year to date, our numbers have evened out. So we really encourage our clients, don't just look at the month. Don't make any rash business decisions on the month. Really look at the entire picture. When you're looking at the financials, I've been talking a lot about the fact that what Kickstart does is done with you services. Yes, we do the bookkeeping for you. Yes, we send the financial statements to our clients. But as business owners, nobody can do, like, I can't cram this into your head. I can't make you do anything. Right. So what do you do with the information, right? Like, how do you process it? And then how do you decide when to take action with it?
Well, first of all, I'd like to say that I think you guys at Kickstart Accounting do an amazing job and go above and beyond what your average bookkeeper and definitely what your CPA provides you. So, I mean, if you guys are, anybody's listening that doesn't work with Kickstart, they are a plethora of information and really understand how to help businesses with financial data. So like a bookkeeper was the very first non-revenue generating expense I did in my business. And it was the best spent money ever. I will never not have a bookkeeper. So that being said, I think it comes with time. I will say, it's like learning a new skill. So they know the numbers, right? They can look at the numbers and I can look at the system and say, oh yeah. So again, if she just looked at my numbers and was like, man, you messed up in February, you're effed. Like, I'd be like, well, 3
Right.
payrolls hit, and it was my bookkeeper that actually called me and said, hey, by the way, don't freak out about February. You had 3 payrolls hit. And so you're going to be totally fine. But not all bookkeepers do that. Right? Not all bookkeepers do that. And so it's important. And then it's also important to give yourself grace. You're just learning. If you're just starting out, you're just learning about that stuff. So for me, what I look at is, okay, are we moving in the right direction? So if our goal in 2024 at Pilates in the Grove is to optimize profitability and get back to our 15% profit margin, are we moving in that direction? So if I was like, hey, I want to buy a new piece of equipment, is that getting me closer to my goal or farther to my goal? And what do the numbers tell me about that, right? The other thing that for me, and you and I have had this discussion a lot, I don't love debt. I just don't. I don't love debt. I don't love owing people money. And so if I want to invest in a big ticket item, let's say a mastermind, $15,000, $20,000, $25,000, I will often, now having a line of credit has been a godsend for me. And I wish somebody would have told me about that sooner in my business career, but it's been great. But I also am the type of person that I'll be like, okay, how can I earn that money so that I have it ahead of time? That might be, I want to invest in, let's say Danielle had a $15,000 mastermind for me to become a CFO. I don't know. And I was like, I want to take part in this program. I could say, I'm going to save $1,000 for a year and I'm going to enroll next year. That's one way I could do it. I could say, how can I generate $15,000 or $7,000 in my business to be able to afford to at least put it down? And then my hope is that if I invest in a program, it's going to turn around and give me a return on my investment. So, but I don't want to let the business go into debt necessarily. That's just me. That I'm not saying that please don't take that as like that is something you should do. No. I have talked at length with Danielle about this, and I am just a person that I don't love debt. So I would just say, okay, what can I do as a business owner? So if anybody is out there right now thinking, I want to invest in something and I don't have, or I don't think I have the money. One, talk to your bookkeeper. And if you don't have a bookkeeper, get a money team. Get a money team, please, because they can really guide you, not make the decision for you, but guide you. And the other thing is, there are ways that you can say, maybe I'm going to run a course. Maybe I'm going to sell a program. Maybe I'm going to sell a product and I'm going to generate that money. That's me. And that's how I like to go about the business. But Danielle has also been really, really great with even, what's the word I'm looking for? I don't want to say, well, challenging, maybe, like not aggressively challenging, but challenging my thought process and my belief. And I still will make the decision, but her input and feedback allows me to think of it in a different way and allows me to say, you know what, that's actually, I like that point. I never thought about it that way. And I think as a business owner, the most important thing you can have is being open-minded to doing things a different way.
Thank you. Thank you for sharing all of that. I appreciate you sharing so openly. And I hope this was helpful for everyone. And that's exactly what we did today, was we shared another way of looking at your numbers, another way of looking at the finances, looking away at money mindset. I appreciate you sharing your story around debt and mindset around debt, because I'm quite comfortable with it. And I think it's a great tool for business, but these are all options, right? These are all options and different ways to look at your numbers. You have an amazing podcast. Where can listeners tune into your podcast and just learn more about you and your community?
So the Female Empowered Podcast, anywhere you get podcasts. Danielle's been a recurring guest on there. And, you know, my goal is really to give women as much information as possible so that they can run successful, sustainable, profitable businesses very similar to you. And I believe every single female can learn the skills required to run a successful business. They can all be learned.
It can be learned. Mm-hmm. Well, Christa, thank you so much for being here today. I appreciate it.
It's always a pleasure. Thanks so much.
How inspiring is it to see a fellow female business owner using their numbers and growing their business? Now, if you need help looking in the future of your business, not just bookkeeping, looking at the past, but really taking a forward-looking approach to goal setting, budgeting, and strategic thinking, I want you to go to kickstartaccountinginc.com/CFO to learn more about our CFO services. Now, Christa mentioned throughout the show several times that she has her head of operations who also serves as her CFO. This position in your business is that individual who's going to help you look to the future, budget, and help you make better strategic decisions as the CEO. If you need that partner in your business and not ready to hire a full-time COO or CFO, go to kickstartaccountinginc.com/CFO to learn more. I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.